Last class, we were talking about liquidation, then meaning of liquidation, meaning of liquidator, then different methods of liquidation, and what are the obligations or the duties of liquidator. So today we will see the payment of liabilities in case of winding up. So you know the various functions or duties of liquidator, that is to protect the assets till they are realized, to realize the assets of the company, to collect the money due from the contributories, then to distribute the amount realized from sale of assets and amount received from contributories in the order of preference. So today we will discuss about this order of preference. Okay. Payment of liabilities on winding up. The amount realized out of the assets will be distributed in the following order. So the first one is secured creditors. So secured creditors are those creditors whose claims are secured on specific assets. So secured creditors are those creditors whose claims will be secured by some specific assets. They may themselves realize the security or relinquish the security and prove the debt. Okay. In case the creditors decide to realize the security, the surplus, if any, will be handed over to the liquidator. On the other hand, deficit balance, if any, will be treated as unsecured creditors. Now, an example of secured creditors is secured debentures. So, the first item appearing while making payment of liabilities is secured creditors, or the first person to be settled is secured creditors. Now, who are secured creditors? So, secured creditors are those creditors whose claims are secured on specific assets. Now, these secured creditors may themselves realize the security. So, there will be certain security offered to the secured creditors. So, sometimes these secured creditors will themselves realize the security and take the amount, or they will relinquish the security and prove the debt. Now, in case the creditors decide to realize the security, then in case there is any surplus, then that surplus will be handed over to the liquidator. For example, in case the amount of debt is 1 lakh. And on realizing the security, they have received rupees 1,20,000. In this case, this 20,000 being surplus, it will be handed over to the liquidator. Now, on the other hand, in case of deficit balance, now it will be treated as unsecured creditors. So, in the order of preference, this unsecured creditors will come later. So, at the time of making payment to the unsecured creditors, this will also be considered. Okay, so in case there is any deficit balance, then it will be treated as, or they will be treated as unsecured creditors. And the example of secured creditors is secured debentures. Now, the second is workmen's due. Now, workmen means employees of the company. At the time of liquidation, they will be secured creditors in respect of their claims. So, workmen simply means employees of the company, and at the time of liquidation, they will be secured creditors in respect of their claims. And their claims usually include wages, salary, holiday remuneration, pension fund, gratuity, etc. as per section 529. Okay, so workmen's due. In this case, workmen means employees of the company, and at the time of liquidation or winding up, they will be secured creditors in respect of their claims. And what are their claims? Their claims include wages, salary, holiday remuneration, pension fund, gratuity, etc. Then, overriding preferential payments. Now, as per the provisions of section 529A, so this is as per section 529 and this is as per section 529A, some creditors will be paid before any payment is made to other preferential creditors. Okay, so this is as per section 530. Then this include workmen's due and also debts due to secured creditors. So the third item is overriding preferential payments, and as per the provisions of section 529A, some creditors will be paid before any payment is made to preferential creditors as per section 530. And this may include workmen's due and also debts due to secured creditors. Then the fourth item is preferential creditors. Now, sometimes Some unsecured creditors are paid in priority to other creditors, and such unsecured creditors are called preferential creditors. So preferential creditors are creditors who will be getting some priority over other creditors. Okay, such creditors are called preferential creditors, that is they will be getting some preference over other creditors. So such unsecured creditors who enjoy a preference over other creditors are known as preferential creditors, that we have already discussed. So preferential creditors are those unsecured creditors who will be enjoying a preference over other creditors. Okay, now according to section 530 of the Companies Act, following are the preferential creditors. One is all taxes, cesses and rates due from the company to the central and state government or to the local authority. Then all wages, salaries due for a period not exceeding 4 months before the commencement of winding up and other payments to employees. Then there can be various compensations as per certain acts. For example, Workmen Compensation Act, Industrial Dispute Act, as so various compensation to be paid under various act, they can also be included under preferential creditors. So preferential creditors are those creditors who will be getting certain preferential rights with regard to the payment of liabilities over other creditors. So they may include all taxes, cesses and rates due from the company to the central government, state government or to local authority. Then all wages and salaries due for a period not exceeding 4 months before the commencement of winding up and other payments to employees. Then next is debentures not secured against specific assets. So secured debentures will come under the category of secured creditors. Okay, so there can be certain debentures not secured against a specific asset. Now when debentures are not secured on a specific asset, these may be treated as secured on floating charge. So here there is no specific charge over specific asset, but there can be certain floating charges. So when the debentures are not secured on a specific asset, in case it is secured on a specific asset, then there will be certain specific charge. But in case there is no security specifically entrusted, then there may be a charge called floating charge. So these may be treated as secured on floating charge. These must be paid after making payment to preferential creditors. So such creditors will be paid only after making payment to the preferential creditors. So arrear interest must also be paid. So in case there is any interest in arrear due to the debenture holders, they will also be paid. So the next item is the very same, that is interest on debentures. So on liquidation, outstanding interest had to be paid. In case there is any interest on debenture outstanding, it should be paid. And if the company is solvent, so this payment of interest or the calculation of interest depends upon whether the company is solvent or not. In case the company is solvent, then it is paid up to the date of actual payment. And in case the company is insolvent, then it will be paid up to the date of liquidation. So in case the company is solvent, then interest on debenture will be paid up to the date of actual payment. And in case the company is insolvent, then it will be paid only up to the date of liquidation. Then comes unsecured creditors. So after making payment to the preferential creditors, next is unsecured creditors. So unsecured creditors are those who do not enjoy any special benefit. Okay, so unsecured creditors are those creditors who will not be having any special benefit. So they are ordinary creditors. If any contingent liability becomes an actual liability, the same should also be included. So unsecured creditors are those creditors who does not have any specific benefit or special benefit or any preference. Okay, so they are ordinary creditors, and in case any contingent liability becomes actual liability, then the same should also be included. Next is preference share capital, then comes equity share capital. So these are the shareholders of the company. So after the unsecured creditors comes preference share capital or the preference shareholders, and then comes equity share capital or equity shareholders. In case any surplus remains after making payment as mentioned above, it will be distributed among the equity shareholders and participating preference shareholders. So participating preference shareholders are those shareholders who will be having a right to participate in the remaining income after making payment of dividend to the preference shareholders at a fixed percentage. Okay, so they are called participating preference shareholders. You know the different types of preference shares: participating, non-participating, cumulative, non-cumulative, redeemable, irredeemable, and so on. Okay, so in case of participating preference shareholders, they will be having an additional right to participate in the income left after making payment of all the dividends. Okay, so these are the order of preference. One is the secured creditors. So first one is secured creditors, then comes workmen's due, overriding preferential payments, then preferential creditors, then debentures not secured against a specific asset, then interest on debentures, then unsecured creditors, then preference shareholders and equity shareholders. The next is statement of affairs. So there are various statements to be prepared in relation to the liquidation or related to liquidation. So one is statement of affairs. Now what is meant by statement of affairs? So the statement of affairs is prepared by the board of directors at the beginning of liquidation process. So statement of affairs is a statement prepared at the beginning of the liquidation process and it is prepared by the board of directors. Then it shows the company's state of affairs on the date on which the liquidator is appointed or the court makes the order for winding up. So this will be, that is a statement of affairs. It will be showing the company's state of affairs on the date when the liquidator is appointed or the court makes the order of winding up. So actually the statement of affairs will be prepared at the beginning of liquidation process and it will be prepared by the board of directors. Now its purpose is to indicate the amount that the board of directors expected to realize from the sale of assets, then payment to be made to the creditors and shareholders, and the estimated amount of deficiency or surplus. So the purpose of preparing the statement of affairs is to know what amount can be realized by selling the assets. Then what amount is required to make payment to the debts and liabilities, and the expected deficiency or surplus after making payment of debts. In other words, its purpose is to give the liquidator a rough idea about the financial position of the company. So statement of affairs is prepared on the date on which the liquidator is appointed and we are beginning the liquidation process. So there is one more purpose also, that is to give the liquidator a rough idea about the financial position of the company. Now it must be prepared and submitted to the official liquidator appointed by the court within 21 days of the court order. So it should be prepared and should be submitted to the official liquidator within 21 days of the court order. Then it must be prepared in the prescribed form. So there is a prescribed form for the preparation of statement of affairs. This is the form of statement of affairs. So first is particulars and expected realizable value. So the first item will be, this list we will discuss later. So first item, assets not specifically pledged. So this is as per list A. So there are certain lists to be prepared and the list we will see later. So the first item is assets not specifically pledged. Now under this, balance of bank, cash in hand, marketable securities, bills receivable, trade debtors, stock in trade, fixed asset. So it should be written item wise. So the first item, assets not specifically pledged as per list A, and this includes cash at bank or the balance at bank, cash in hand, marketable securities, bills receivable, then trade debtors, stock in trade, fixed assets. Then second item is assets specifically pledged. So first was assets not specifically pledged. Then comes assets specifically pledged as per list B. So here we have to write the name of assets here. So this is expected realizable value. Then out of this, due to secured creditors. Then third is deficiency ranking as unsecured. And the fourth is surplus carried to last column. So while discussing about the secured creditors, we have already discussed that they can sometimes realize the asset. Then in case there is any surplus, it will be handed over to the liquidator, and in case there is any deficiency, they will be treated as unsecured creditors. So these items comes here. So assets specifically pledged. Now assets, realizable value, then out of the realizable value due to secured creditors. Then this is deficiency ranking as unsecured. In case there is any deficiency, it will be treated as unsecured creditors. Then surplus carried to last column. That is, surplus will have to be handed over to the liquidator. So realizable value due to secured creditors, deficiency, surplus. So this is assets specifically pledged as per list B. Then this is summary of gross assets, which means assets specifically pledged and assets not specifically pledged. Then gross realizable value of assets specifically pledged here, then other assets, then gross assets. So summary of gross assets, specifically pledged, other assets, then gross assets. Then gross liabilities. So we will have to realize the assets, then out of the realizable value or the amount realized on sale of assets, they will be used for the purpose of meeting the liabilities or paying off the debt. So next item is gross liability. So here we will write the gross liability, other things we will write here. Okay, secured creditors to the extent to which claims are estimated to be covered by assets specifically pledged. So secured creditors to the extent to which claims are estimated to be covered by assets specifically pledged. Okay, then preferential creditors as per list C. So the next item is as per list C, preferential creditors. You know the meaning of preferential creditors. So estimated balance of assets available for debenture holders and unsecured creditors. After making payment of preferential creditors, next is to the debenture holders and unsecured creditors. Then comes debenture holders as per list D. Then estimated surplus or deficiency regarding debenture holders. So after making payment to debenture holders. Then comes the unsecured creditors as per list E. Then estimated surplus or deficiency as regards creditors. Then issued and paid up capital. So next item is preference share capital as per list F and equity share capital as per list G. Then the last one will be, so there is one surplus or deficiency as regards members, and this is as per list H. Okay, so this is the format of statement of Affais. So this format you have to study. So assets not specifically pledged as per list A. So these are the items. Then comes assets specifically, this is not specifically pledged, and here assets specifically pledged as per list B. Then comes the gross assets. Then out of this amount we have to meet various liabilities in the order of preference. Okay. First secured creditors, then comes preferential creditors, then debenture holders, unsecured creditors, thereafter preference share capital, equity share capital, and finally estimated surplus or deficiency. This will be prepared as per list H. So there are various lists to be attached to the statement of Affais. So various lists to be attached to the statement of Affais, and now we will see what are the various lists to be attached. That is list A from list H. So the different lists are from list A to different list A to list H. Okay. So these are the list. List A gives a complete list of assets not specifically pledged in favor of secured creditors. List A gives a complete list of assets not specifically pledged in favor of secured creditors. Then list B gives the list of assets which are specifically pledged in favor of secured creditors. Then list C includes the list of preferential creditors. List D includes the list of debenture holders and other creditors having a floating charge on the asset. List E contains the names, addresses and occupations of unsecured creditors and the amount due. List F contains the name and the number and value of shares held by various preference shareholders. List G gives names and holdings of equity shareholders, and finally list H shows how deficiency and surplus in the statement of Affairs has been arrived at. So these are the different lists. List A with regard to asset not specifically pledged. List B, asset specifically pledged. List C, preferential creditors. List D, debenture holders. Then list E, unsecured creditors. List F, preference shareholders. List G, equity shareholders. And list H, that is deficiency or surplus in the statement of affairs. Okay. So this is list H, that is deficiency or surplus account. So what is deficiency or surplus account? One more statement called deficiency or surplus account is also attached to the statement of affairs. It is prepared to prove the deficiency or surplus shown by the statement of affairs. So finally we will be arriving at deficiency or surplus in the statement of affairs. And this deficiency or surplus account is prepared for the purpose of proving the deficiency or surplus shown by the statement of affairs. In other words, it explains the reasons for surplus or deficiency. So at the end of the statement of affairs, we will be having deficiency or surplus. And this deficiency or surplus account is prepared for the purpose of proving the deficiency or surplus shown in statement of affairs. That is, it will be explaining the various reasons for the surplus or deficiency. So here, in case of deficiency or surplus account also, there is a format. So that format also you have to study. So this is deficiency or surplus account. First, items contributing to deficiency or reducing surplus. So the first one is items contributing to deficiency or reducing surplus. And the various items are profit and loss account, debit balance. Then dividends declared, net loss for the current period, estimated losses now written off or for which provision has been made. Then other items contributing to deficiency or reducing surplus. So these are the items coming under items contributing to deficiency or reducing surplus. First is profit and loss account, debit balance. Then that is the item which appears on the asset side of the balance sheet. Then dividend declared, net loss for the current period, estimated losses now written off or for which provision has been made. Then other items contributing to deficiency or reducing surplus. Then the total. Then items reducing deficiency or contributing to surplus. So here it was contributing to deficiency and reducing surplus. Now here this is reducing deficiency and contributing to surplus. First item is profit and loss account, credit balance. So here it was profit and loss account, debit balance. So here it will be profit and loss account, credit balance. That is the item appearing on liability side. Then dividend declared. So here there is no such item. Then net loss for the current period. It becomes net profit for the current period here. Then other items reducing deficiency or contributing to surplus. So profit and loss account, credit balance, net profit for the current period, other items reducing deficiency or contributing to surplus. So here also there will be a total. Then deficiency or surplus as shown in the statement of affairs, both will be the same. That is deficiency or surplus as shown in the statement of affairs and the amount shown in the statement of affairs. So this will be explaining the various reasons for this deficiency or surplus. So here we have studied the order of payment of liabilities, then statement of affairs, the format of statement of affairs, then various lists to be attached to the statement of affairs, and also the preparation of deficiency or surplus as per list H. Okay, thank you.